Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, April the 6th, 2012, and like we do every Friday, we're going to be going over all the major markets that we track at PerfectStockAlert.com. Remember that all these charts, there's 17 of them, they are all kept on our free website at PerfectStockAlert.com. You can check them out there anytime you'd like. They're updated every single night. So let me show you what I'm looking at right now for the week ahead. A lot of people are going to be looking at this chart. So some confusion, not just this one, but throughout the markets, and not certain which direction she's going to go. That makes sense to me. Right now we're actually seeing a lot of signs that we could see a short-term bounce to the upside. However, that does not make me a bull. And in many cases, I have no reason to be a bull. So let me show you. We'll start off with Australia's markets here. This one we've been following for a while. It had this major resistance line here. We saw this fine resistance here, reverse to the downside, fine resistance again, sell off again, advance our stop. We get stopped out. She advances again, fails again, and then again here. You get the shooting star formation right here. We didn't actually expect a lot of breakdown here. We actually expected a break to the outside because the markets were as bullish as they were at that time. However, we told you on this breakout we would not be a buyer because we've seen on a longer term chart some major resistance levels on the 50-day and the 200-day moving averages on the longer term charts. And that's exactly what happens. She breaks up the upside, doesn't have a lot of room to run before she hits that major resistance. That's why we get this big nasty sell signal right there. Inverted hammer at the top of the pattern or shooting star formation. Also, you'll notice if you look at the high point of this close versus the high point of this close, you're trending up. Yet the corresponding time period for the ultimate oscillator, which analyzes the momentum of the buy pressure, was trending down, not confirming this breakout at all. And now we're rolling over. We actually have a sell signal there telling you could have sold at that time, or the next day you could have done that and made some money on the downside intraday, but she did bounce back up because remember, this previous resistance is now going to be acting as support, so to bounce off of that makes sense. Do we still continue to move to the upside? It's possible. I have advanced my stop on that to see if that does happen. I want to get stopped out and make it a better short opportunity later, and for all I know we could break out to the upside. I don't have big hopes or something like that, but I do see the chart is showing signs that it could break to the upside again, so advance your stops. The Dow Jones Industrial Average, this one we were stopped out of on our short trade. We just tried to call the top there and didn't get the exact top. We got stopped out for a couple, what was it, 13,297 versus our stop at 13,290. So about $7 difference between where we thought the top was and where the top actually was. So we missed that opportunity. However, you'll notice in this particular chart, is showing some signs that we could bounce around in here for a little bit, and so that's why we're not shorting it right now. Look at this high point here, and then the higher high here that's trending up, right? You've got this low point here and a lower low here that's trending down. When you have conflicting signals like that, the true direction is just sideways. That's why I'm not shorting right here. If we get a bounce to the upside, which we could get, and we start to move sideways again, I may get a better short opportunity. I may get, who knows what's going to develop here, but I don't really want to start shorting at this point right now. You'll also notice that you look at last Thursday's candlestick formation, little doji formation right here, or maybe even a hammer candlestick formation. These two basically call for a bounce to the upside as well. So that's more reason why I'm not shorting at this very moment in time. But I'm also not a buyer here at this time. The French CAC 40 index, this one has been in a move to the downside. We've traded this successfully, made lots of money, it's all happy. We had this basic head and shoulders pattern. There's the first shoulder, there's the head, there's the second shoulder formation. Notice the resistance is about the same level here. We come down and close below this neckline. We've been tracking that for a while, telling you once you close below it, you could then measure the distance from the high point down to the neckline, then measure that out and say, okay, from the breakout point, it's about how low we expect price to go before she finds support. And that's about what happened here. You'll notice that you're starting to see today's activity is, or not today's activity, the last candlestick form from the last trading day here. You can see it's another hammer candlestick formation showing that we are finding support at this level at the 200-day moving average. And so again, we could see a bounce to the upside. I would not be a buyer of this situation. I have advanced the stop to the high of the candlestick. If we do bounce, I want out short term, but I don't want to buy it because we are, let me clean that up again, in a downtrend. You want to trade with the trend. That's much more successful than trading against it, trying to call tops and bottoms is actually very difficult. So in this case here, we're still trending down. I want to see this next bounce. If we get a lower series of highs, then I can start shorting it again, but I don't want to be a buyer. The German DAX composite, another basic downtrend here. We have this high point, moves to the low point, and tests the high, can't break through, so we go short, and she starts to break down. We get lower lows, lower highs, and here we are again showing a hammer candlestick formation, very weak one, but we could see a bounce to the upside. So I have advanced the stop to this point here. If we get a bounce to the upside, I will look for another short opportunity. But again, we are in a downtrend. That's the way that you want to trade with the trend. That means you have to be shorting this because it's in a downtrend. The gold chart, this one we're glad we actually passed on last week. We talked about it during this time period. You had a hammer candlestick formation, a higher low than you had over here. You'll notice that you had a high point here, a higher high here. So it looked like she might be reversing that downtrend into an uptrend there. But silver didn't confirm that, and so we passed on it. We didn't try to buy it. That was a good call because eventually she broke down with the market sell-off that we saw this week. And now we're not actually seeing a hammer candlestick formation at the bottom here, so I don't think we've necessarily seen the bottom yet. We may bounce around a little bit here or there. I'm not going to trade in any way, shape, or form at the moment. The Hong Kong Hang Seng Index has been in a nasty downtrend for a while. We haven't actually traded it. We had this move that goes to the upside, finds resistance, sells off. Resistance again, lower low. Big move to the downside here. We could trade to the upside. We did that, kept advancing our stop. We get stopped out as she rolls over and continues to go lower. Right now, there's very little activity right here and not enough volatility for me to try to trade that, so I'm just going to pass on this chart. It is in a downtrend, so I would not be buying it. If you feel you have missed the opportunity to short some of these markets that we've been doing over the past couple of weeks there, if you've missed that, this is one, the India Bombay Stock Exchange, is one where you may still have an opportunity. Note this 17,687 high here. You had this move here, pulls back down to low point, attempts to test that high and fails at 17,664, and you get a shooting star or inverted hammer at the top of the pattern there, and then we roll over the next trading day. So this would be a short opportunity here. I have it marked as such. I have this high point as the stop loss limit. You break that, I want to be out, but otherwise I expect the overall trend to continue, and that trend is down. So as long as that trend is down, you want to trade with the trend, right? So this is an opportunity to sell. Look for a test of the previous low, and you can break lower. As I've shown you on several charts in the markets, we do see signs that there is potential for a little bounce here in the markets heading into next week. Remember, typically you have a long holiday, and there's no major news. We did have some news that wasn't all that bullish on the employment numbers that came out today, but people have time to digest that information over the weekend. If it was the market was open on Friday, we would have seen a sell-off. I actually posted a report on that news that came out this Friday on our Facebook page, Twitter, and Google+. So if you follow us anywhere on those pages, you've already read that article. If you haven't, please do so. It'll help you. Right now I'm looking at Japan's iShares as being one of the places that I would trade on the long side. If you're looking at that bounce potential, we might see, and again, if you've seen enough charts, it's confirmation it's probably likely going to happen. So typically, I don't care about a gap formation on an ETF or that kind of, with this iShares chart. I wouldn't pay attention to that. But this particular gap is rather large. Let me show it to you right here. You can see this close on this day, and then we just gap way down here. So they've got this monster gap here. Then that comes into play right now. I'd be looking for it to fill at least part of it. So this right now, coupled with the fact that you get a hammer candlestick formation here, coupled with the fact that the last candlestick formation is also an inverted hammer, which at the bottom of a pattern once you've sold off, and then you see those, they call for reverse back to the upside as well. You're also seeing a series of higher highs from one candlestick to the next, and a series of higher lows from one candlestick to the next. All of that is telling you look for a bounce right here. Also, on top of that, you look at this high point here. Let me clean this chart up. All right, let me get those tools out again. There's that. All right, you got this high point here and then a higher high that's trending up. You've got this low point here and then a lower low that's trending down. What did I tell you about that? Whenever you have a situation where you have conflicting signals like that, the trend isn't up or down, it's sideways, which we have been talking about on this chart for a while. That's all it's been doing. So you could actually be a buyer here expecting that trend to continue and at least get a move to the middle Bollinger Band line here. So that's something that I'd be looking at on the long side. I could see that that trade being made there. I would keep a stop off of the 976 low of that hammer candlestick formation, so the stop would be 975 right there like that. I'd be a buyer within this range looking for a test of the previous high. So that's the trade on the long side that I would see for this market, and I believe it's the only one that I see right now. The FTSE, or the London Financial Times Index, this one has been on the move to the downside. Very nice here. Let's see, we had this move up here to find resistance about that level. We come down, jump back up there again, fail again, another shooting star formation, inverted hammer, sells off, fails again, and we get short, and she goes lower. She bounces up here again, she fails again, and she goes even lower. We have now taken the stop that was way up here and moved it way down here. So we've locked in some gain. We're also seeing a hammer candlestick formation here. At this level, it makes sense. Actually, you have this support that you had formed as you were getting this little channel right there. If you extend that out, you'll see that you're basically falling right there, finding that that previous resistance here, here, and here, once you broke out, became support, and that's why you're seeing that. Am I a buyer here? No. I wouldn't be a buyer because she is in a downtrend. However, I could understand somebody doing that and saying, okay, I'm going to buy this guy right here on this hammer candlestick formation, set a stop off of this low. If we get a higher high than this candlestick right here, then I'd be a buyer. I could see somebody doing that. And I don't know, maybe on Monday or Tuesday or something, the market will do something to make me interested in taking that trade if it's still available to me. But right now, I'm not going to do it. The NASDAQ is probably the most overbought chart that I've been tracking for the past couple of weeks. We told you that the RSI in the longer term chart was extremely overbought, and you were looking at a situation where you're going to peak and you're going to roll over. We actually called the top on this one perfectly, but again, we also noted it and said, hey, this is a high risk situation because we are fighting against the trend. The trend is up here. You can see that you have a series of higher highs and higher lows. So when we're trying to call the top there, that makes it that much more difficult. But in this situation, it actually worked in our favor. We have advanced the stop down to the low, the high of the previous candlestick formation. If we do get a bounce in the markets, we want to cover that short position and see if we get a better short position. But I don't want to be a buyer here, mainly because the trend has changed. Let me get that cleaned up. Mark that up again. You can see that we have this high point to this low, to this lower high, to this lower low. And the trend has now changed from an uptrend to a downtrend, and I want to be looking for short opportunities, not long opportunities. The NASDAQ is an important enough chart that I want to show you the long-term picture here, especially right now. Even though we have sold off a little bit and made a little bit of money there on that trade, we still see the downside risk here is substantial. You'll notice that the first thing you want to bring your attention is the RSI. Whenever it hits above the 70 at or above 70 line, it is in the overbought territory. That has been the case every time for the past couple of years. You get up here and hit above that line here, you sell off. The next couple of weeks, you do it again here, you get the major sell-off following. You do it here, you get a couple weeks to the downside here, a couple more weeks to the downside. Major resistance being formed at that same level. You start getting the downtrend of the showing the bearish divergences. Price was going higher, but momentum was going lower. It tells you this is not sustainable. She falls apart here. We jumped up here and get overbought again, and now we're starting to see that sell pressure. Also, note right here, this candlestick formation prior to that sell-off right there was the shooting star formation. Also, we had 1, 2, 3, 4, 5, 6, 7 consecutive weeks to the upside in a row. That's above average. The last time we saw something like that was back here, 8 consecutive weeks to the upside in a row. That was prior to the flash crash. So it's not something that I want to be a buyer of in any way, shape, or form right now. The oil chart, this one was, well, we've been trading this one for a while. We had the head and shoulders formation we talked about before it actually broke down there. And we had this, the first shoulder formation, the head, the second shoulder formation, and then we finally closed below that neckline, which we had warned about and told you when that happened, you could measure this distance out, so forth and so on, and get a target for how low you expect the price to go. We fell a good bit here, but didn't get a hammer candlestick formation, and so when we saw the reversal here, I told you I wouldn't be a buyer there. A lot of times that you'll see a kick back up after you've broken through to test that neckline to see if it's actually going to act as support now, because it was acting as support here and here. Once you break through it, it begins to act as resistance. So we did get this move to the upside here, but she reversed back to the downtrend, and then she got a hammer candlestick formation at roughly the distance that we expected it to go. So this would be a good buy point. We took that opportunity. You can trade to the upside here, but you'll notice, like we talked about when it's happened, is if she didn't break out above this point here, which was the new resistance line, if you didn't break out above that, then it was likely you're just going to fall back down lower and either go sideways or lower. We don't know yet. But right now, I wouldn't be a buyer of this chart, even though you could bounce to the upside or do this and that. I'm just not going to buy it right now. This was the smart trade for us, the UUP, or the US Dollar Index Bullish Fund. We talked about when people start selling stock, they're going to, in effect, be buying dollars because they're selling stock and they're getting cash. And that was going to drive up the UUP, and you could have played that to the long side if you were betting against the market. You had a few days to be a buyer during that time period after we gave that signal. You had 1, 2, 3, maybe even 4 days to move to the upside. Before they move to the upside. So you are in the money now. You should advance that stop. The stop was way down here at the low point of the inverse head and shoulders formation that we talked about at that time, telling you that we were seeing a bottom here, which meant a top in the markets, and we expect a move to the upside. That happened, and we'd like to see her keep going, but for that to happen, the markets have to continue to sell off. So it's really something like that we're looking at, saying it doesn't have to move to the upside in every single day. She could actually pull back here. So if that happens, we want to get stopped out, but if it doesn't, we want to stay with it. So we've advanced the stop, and if the markets continue to sell off early next week, and we'll see this continue to move to the upside. If you close above, or I should say when you close above the neckline here, then you will have confirmation of the inverse head and shoulders pattern. You'll be able to measure this distance out like we've done with all the others and add that to the breakout point and get a target for how high you expect price to go at that time. So that's something to take note of. Right now, this has been a good trade for us. Protect yourself by advancing your stops. The Russell 2000 Small Cap Index, basically a lot like the Australia markets. We talked about it back during that time period. You had this move to the upside, found resistance, sold off, runs up here again, hits the same resistance, sells off again, sells off bigger again. We told you at that time that even though you can get a breakout there, we wouldn't really be a buyer because we don't see a lot of upside potential. We showed you a longer term chart just like we did with the Australian market, said that the upside was limited. She breaks to the upside and then fails, pulls back. She does it again, she pulls back. This time though, we started going short the markets, a lot of markets, and I told you at that time I could be wrong. Even though we're seeing lots of sell signs, we are still seeing hammer candlestick formation and so forth and so on. So this was my trade in case I was wrong. One single situation where I was on the long side, so it would decrease any losses if I were wrong on my short bet. So in any event, I wasn't wrong on the short bet. She ends up taking off to the upside and reversing, breaking it and stopping us out. We end the long trade and immediately go short. We have advanced the stop to the low point here. If she continues to go lower, we'll stay with it. If she bounces around on this little formation here, then that's fine too. We'll just get stopped out and look for a better opportunity. The S&P 500 Large Cap Index, this one is not as overextended on the longer term chart as the NASDAQ. And we're not actually short or long at this time on the SPX. Of course, it wouldn't be long, but we're not short either. You'll notice that you've got this series of high point here and a higher high here. She's trending up. You've got this low point, higher low, higher low. So at this time, I'd be fighting the uptrend to go short. So I'm just not doing that here. However, like I've mentioned with other charts, this uptrend right here should be in question as it's not being confirmed by the momentum of the ultimate oscillator. You know what happens when that happens. You get the bearish divergence, and then eventually you pay the piper. So we're not a buyer here. Silver is a lot like the gold chart, only maybe even weaker. I don't really see anything here, nothing that I can trade. Yeah, I'm just not a fan of metals at the moment. I'm just not going to trade it until it becomes very clear what I should do. I'm just not going to do anything. Another monster awesome trade for us was Canada's markets at the Toronto Stock Exchange, TSX. You've had this major head and shoulders formation that we've been talking about for some time here. You had the first shoulder, the head, it comes up here and forms the second shoulder. You can draw it however you like, but basically it's another head and shoulders formation. Breaks to the downside. We told you that when you had closed below this neckline here, you could look to measure this distance out and say, okay, this is how far we expect price to go. Subtract this distance from the breakout point and say that's how far. Well, so you can see based on that, you've got a lot of downside potential here. However, you are getting hammer candlestick formations right here and right here. So you could see, let me clean that up, you could see a little bounce to the upside here. You also have this major gap right here and here. As another one here. So you could see a move to the upside just short term, and I would use that as a short opportunity because we are A, in a downtrend, B, in a head and shoulders formation showing a top. We have closed below the neckline, which confirms that head and shoulders pattern. So I have no reason to be a buyer here, basically. So if we get a move to the upside, I want to get stopped out. That's why my stop is right here. I want to get stopped out as she moves up here, but I want to be looking to see if I get another short opportunity, lower series of highs and lower series of lows. I want to be looking for short opportunities, not long, and I would take that opportunity and then look for her to continue to move lower. The last chart we're going to be looking at today will be the VIX, the Volatility Index. This runs the inverse of the S&P 500. So if it's moving to the downside, the S&P will be moving to the upside, and vice versa. This is another one of the reasons why I see potential for a move to the upside by the markets. A small one, but I do see it. We really aren't seeing a lot of strength on the VIX right now. Okay, what we have here is this big move to the downside, and we started seeing this little channel formation. So we thought at that time we could see another big move to the downside in the VIX, which would mean another big move to the upside in the markets. However, that never materialized. We realized that the day after we went short here, you start selling the next day, we move higher. So that shifted us and said, oh, wait a minute, something's not quite copacetic. The next day, we get a higher series of highs and pull back down. Said that's a buy opportunity for us in the VIX and a sell opportunity for the markets. And then a couple of days later, she materializes and she moves to the upside. We advanced the stop. We got stopped out on the last trading day here, so we made a little bit of money, maybe a couple bucks there. To the upside, but at the same time, we're not seeing real strong candlestick formations here. On the upside, you can see cloud cover here, dark cloud cover here, another shooting star formation here, hanging man candlestick here. None of these are really strong signals of we're going higher right here, right now. In fact, what we have is this previous support here, here, and here. That support line is basically acting as some resistance right there. So that's what we're churning through right now. We're not really there yet. We may actually pull back a little bit, firm up again, and then break through. That little pullback in the VIX could actually translate into a little bump to the upside in the U.S. markets. So there's sort of some confirming signals here. Both the VIX and the markets are telling you could see a bump to the upside in the markets, and in turn a move to the downside in the VIX. So we're fine with that. We don't want to fight that fact. But we're not confident to be a buyer of the markets that we're seeing right now, except for that one that I've shown you with Japanese markets. I see some potential there for a little trade. But I'd still be looking for a short opportunity. So I want to see this pullback in the VIX, and does it give me an opportunity to go long the VIX again at about the same time that I want to be looking to go short the S&P, okay? So that's what is on the agenda for next week. You now know everything that I know. It's a little bit of murky water out there, but we've made some really good money on our short calls, so let's advance the stop, protect ourselves, and not get long just because we see a bounce potential. Let's wait and see if something gets a little bit clearer for us, okay? I hope you enjoy your weekend. God bless and take care, and I will see you all on Monday. Please be sure to share our videos online. That helps us. The more you guys share our videos, the better our website grows. It's a free website. You go to perfectstockalert.com. It's right there, 100% free. All we ask in return is please refer a friend. That helps us grow and then helps us provide that much more for free to you, okay? God bless. Take care. I'll see you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.